Hey everyone, welcome back to Upside Down Data. This video, I'm going to give you a quick update about the current risk levels as well as the trend readings for 20 top cryptos. And the point that I want to drive home is that crypto is so easy right now. If you're still here, if you've stuck around, you are going to make it. So if you guys like the content, subscribe to the channel, give the video a like, and let's get into it. So before looking at the risk and trend readings, two quick important points of context. First is the DXY. The DXY has been very diagnostic about market movements over the past few months, as it usually is. And it's been testing this critical level for a bit now. It's been up here for a couple of weeks at this 110 level. This is a really critical level because it has some history here. This is an important level of resistance historically and in the recent past. And the DXY is struggling here. It's been losing momentum now for a number of weeks, actually, even as the uptrend has continued in terms of its value. A rejection here is what investors want to see in order to get a little bit more bullish on stocks and crypto. Um, on the other hand, a push up through this level would spell more trouble for equities and the crypto market. So we're going to keep watching this 110 level. This is just important to keep tabs on. So I like to, make it part of the picture when we look at market levels in general. This is going to be affected in part by the second point of context that I wanted to point out, which is that tomorrow, so today's Tuesday, tomorrow, Wednesday the 21st, the US Federal Reserve is going to make their next announcement, their regular periodic announcement about their policies regarding interest rates and how that's going to reflect how the economy is doing in their view. Um, that's likely going to create some short-term volatility. So expect that going into Wednesday. Expect some short-term volatility, but I would also suggest, not financial advice, but my perspective is that whatever happens, up or down, it's not likely to mark a major change in trend. This is likely to be a short-term reaction to the announcement that people will try to profit on in the short term. But if you have a long-term perspective, like we do on this channel, then whatever happens shouldn't really, make you waver from your broader, longer-term thesis. So these are just a couple of things that are happening right now. I want to keep an eye on the DXY, and we obviously need to be monitoring, macroeconomic policy, monetary policy, and that's going to have a major determining effect on crypto markets. So with that said, let's take a look at the actual crypto market and see what the risk levels are like right now. What I've got up here is a screenshot from our website, which is under development and will be ready for the public pretty soon. Um, this is the top 20 here, or 20 of the key ones that we monitor. And we've got the price and market cap over here on the left for each of these 20. And then we've got in the middle here, UDPI risk is the upside downside potential indicator, which is our in-house risk indicator. This tells you, when the risk to reward ratio is favorable versus unfavorable. And these red readings in the negatives indicate that the upside downside potential indicator is looking relatively favorable for that particular asset. When we see green and positive readings, it's the opposite. That means that the asset is a bit overextended potentially and has more downside potential rather than upside potential. Just a scan down these columns makes very clear that the market is quite oversold, meaning that the risk to reward ratio, certainly from a long-term perspective here, if we look in this right column, but even from medium and short-term perspective, which are more, weeks and months types of readings as opposed to long-term, which is really a months to years type of indicator. But we see a lot of consistency across these timeframes that, the market is still quite oversold. And that is especially the case for some key assets. Bitcoin being the market leader is quite favorable from a long-term risk to reward perspective, and that's even more the case for some leading altcoins. Solana is a notable example of this among the top 10. So I think that Solana is quite an interesting one to be looking at right now because it has It has fundamental qualities that give it the potential to stick around for a while, to continue to grow. And uh, based on its own price action historically, it's taken an extraordinary beating, and that means that it has a lot of potential to recover to the upside when the broader conditions allow for that to happen. That's true of others as well, but I think that Solana is one that's particularly interesting to point out right now. Um, on the other hand, there are some exceptions to this rule. The one that's most notable here that I would kind of contrast with Solana is Atom. Cosmos has been uh, generating a lot of excitement recently. It's been outperforming basically the entire market for the last 3 months, and especially over the last few weeks. It has just absolutely exploded, even as most of the market has been pulling back. And this is reflected in its risk levels being pretty neutral from a blank slate perspective. If we're not really thinking about the broader market conditions, then these kinds of readings, a plus 0.58 or so, would not be particularly alarming. But when we look at this in the context of the broader market, even just comparing it with other assets, but also thinking about what this means given that the market as a whole remains bearish, I would probably stay away from Atom. I think that Atom, in these market conditions, has put in a really impressive run, and that just can't last forever, most likely. One indication that Atom might be running out of steam, to move away from the risk indicators for a moment and over to trend confidence. This is our trend confidence indicator. And this is designed to tell us when a trend has kind of exhausted itself and might be ready to flip. And we can see that the trend confidence indicator here is calling a critical level for Atom of $15.16. Atom recently lost that level. It's down about 9% over the last 24 hours, and it has lost this critical level. That is a bearish sign. I mean, that indicates that its uptrend has kind of broken critical structure and might be ready to reverse the downside. I mean, we often see with the trend confidence indicator that it functions as a leading indicator of trend changes. It's good at calling trend changes before they are decisive on the price chart itself. Um, and I think that that's likely what's happened here with Atom. That's not to say that Atom can't put in a lot more upside in the long term. I think that it very possibly can. And if you're holding Atom for the long term, then you can probably stand pat with your position if you're not interested in trading short-term timeframes. With that said, though, on the short term, and if you're looking to accumulate assets on a dollar cost average basis, Atom is probably not a leading contender right now, especially when you look at it in comparison to an asset like Solana, or Polkadot, or AVAX, or HBAR, or even Bitcoin, and even Ethereum. So, many assets across the board here that are flashing attractive risk to reward ratios. It's just that Atom is not one of them. So, when we scan across the market here, we can both, we can pick out the assets that are relatively favorable in terms of risk to reward, and the assets that are comparatively unfavorable, even if they're not extremely unfavorable in an absolute sense. But the one of the ideas of presenting the information this way is that we can scan across a lot of assets and a lot of statistical information here and quickly extract the kind of the outliers. So we've got outliers to the downside here, and those have attractive risk to reward, and we have outliers to the upside here, and those have pretty unattractive risk to reward ratios right now. The trend for most assets is bearish. I mean, the critical level here is above the price for just about everything. There are a few exceptions here. Um, I think the more important takeaway is really that the critical levels here are bearish, and the trend is bearish for most of the market here. We also have our momentum bias indicator, and we have our market direction classifier. So as not to overload you with information, I'm just going to kind of leave it at that and give you this information to absorb. Um, but as I mentioned at the beginning of the video, the broader takeaway here is that when you look at these data, it's just a sea of opportunities. If you are still here and the space is pretty dead, So, a lot of folks are no longer here. But if you're one of those who have stuck around or have even managed to get interested potentially for the first time during this bearish period, congratulations to you. This is 90% of the battle. Sticking around when it's boring, when it's uncool, when people on Twitter are making fun of crypto, when your family is, asking you how you're holding up given how much your portfolio is down, when nobody wants to hear about crypto, that's when the kings are made. So look at this not as, red in your portfolio. As much as you can, reframe this situation and see it as a sea of opportunities. The risk to reward here from a long-term perspective, in my personal opinion, not financial advice, but in my personal opinion, the risk to reward here is amazing. Stick around, accumulate if you can, and hopefully uh, these data, these risk indicators, and our trend and momentum indicators, which we'll continue to bring to you guys and will soon be available online, will help you navigate that process. So anyway, hope you guys found this useful, and thanks for watching.